Piper with the weekend video clip, and it's Saturday the 27th of July, and we're looking here at the daily chart of the Dow. Now the situation with the Dow hasn't really changed. We had this big rally here since the beginning of the year. Let me just get this right, big rally. Then had this ABC decline, which we've been talking about, which finished at the end of June. Since then, the case has been either we're going to see a B wave, which would have probably terminated before now, and then the C wave down, or this is going to be a 5-wave form taking us to around 16,000. Well, yesterday we saw quite a good buying spike on the Dow, so I think that the odds are now going to speed. We're going to see this 5th wave with 16,000, 16,500 as a fair target, and I'm showing a chart in our daily reports of that wave count, thanks to a subscriber, as you all know. So it's all pretty clear right now. Let's have a look at this in a bit more detail. Okay, here's the hourly chart. Had the low here, around 14,540 thereabouts. 1, 2, 3. So there probably. And now an A, B, C. Yesterday's buying spike, and up we go. So it looks pretty likely now that means that we're going to break through 15,600 on the Dow, with 16,000 as a minimum probably. I mean, if we look at this rally here, often the wave 5s follow the pattern of a wave 3 in terms of, wave 1 in terms of length. So we got from 14,540 up to around 15,100, which is about 600 points. So about 600 points will bring us bang to 16,000. So 16,000 is a prime target. It's two techniques with the same target. In which case something fairly dramatic could happen. It's been a long time coming, and of course there's never any guarantees, but certainly having seen 5 waves, and I'm of course projecting this into the future a bit, and yet again we'll be looking at sort of expiry time probably, for this to happen perhaps, although this rally here was only a week, so maybe it's a bit shorter term, but sometimes these things extend. But that's how it looks. It's fairly clear at the moment. We'll have a look at the short-term actions even more so. Okay, here's the 10-minute chart, so we can see the sort of rather confused pattern here. Big sell-off yesterday, and a substantial buying response. End of the day, not much happened. We actually closed on the open. Well, we closed virtually on the prior close, but it's a clear pattern with obvious support around 15,400. And I say that target around 16,000 now looks good. What we could see now is perhaps a 2-wave coming in, and then another thrust up to see that develop. Right, let's look at FTSE now. Here's a daily chart. We still have this 5-wave decline here. Discuss that. A, B, C. But it hasn't really achieved very much. It's trying to go down, but nothing much is happening. And right now, of course, it could become a 5 also. 1, 2, 3, 4, 5. It could see a failure here, I suppose. I mean, we have got 5 here, and it's actually difficult to count that other than a 5. So FTSE could diverge here. We could start to see some divergence, but with the Dow looking positive, and of course we may not see positives on Monday if we're going to see a wave 2 pullback. So it's possible FTSE might decline further. It's possible FTSE may not see another peak, even if the Dow sees 16,000. But FTSE still has the bear case. Let's have a look at the shorter term. There's a 10-minute chart. So we saw these probes above 6,650, and we saw support around 6,600. Obviously we had 3 peaks there. 3 peaks can be quite important. All failed. 2 lots of support. If you ignore the first one, which is a bit of a blip, then a crash through, a blip up again, another crash through. Good selling spike yesterday, and possible 5 waves here, but it does count really. I mean, with the decline here, if you look at it, it looks like an ABC at this point. Let's see if I can get rid of the rectangles. So A, B, C. So although the longer term count we just looked at still looks negative with the 5 waves down, shorter term action is not very definitive right now. Right, if we look at the DAX is betwixt and between. It says we've got a decline here, but it looks more like an ABC. Then we've got another 1, 2, 3. Slightly sharper pullback here, no buying as yet. But of course, the Dow will feed through next week. The Dow's rally will feed through. But again, we could just see a rally which fails to make new highs. So it doesn't really add a huge amount. A quick look at this is the weekly chart going back to 2000. Huge impulse decline. A, B, C. Fibonacci 61% coming up around 3,300. 10% away from current levels, fairly significant. Shorter term act. This rally is making new highs. 1, 2, 3, maybe a 4 now with a 5 coming in. So, again, we're at the point where 5-wave patterns are coming fairly commonplace, suggesting at least a more serious pullback in the foreseeable future. So we'll have a right with gold. If you followed the suggested extreme stop above here, then you will be in profit. That's a clear wave 1 or wave A, clear wave 2 or B. After that, it's not so clear. It looks like a 1, 2, 1, 2. So we really need to see some acceleration to give us, to confirm we're seeing new impulsive action. Haven't really seen that yet. Haven't seen a bit of acceleration, but nothing too dramatic. Wave count's not terribly clear because these, the rallies are not far high, not long enough to take us away from the previous congestion areas, and the declines are sort of dipping back into that. But we're in profit. That's a good thing. We've now got stops. Well, again, if you follow the recommended trades, suggested trade, sorry. We have this sort of buying spike around 1300. Let's have a look at that a bit shorter. One negative here is that the decline off the higher just below 1350 looks like a 5-wave form, suggesting that we could have seen a peak. This is a sharp rally, pretty sharp decline, another sharp rally. So still open really. We still haven't got confirmation that low's in, but it's encouraging, but no more than that. Let's have a look at the T-bond. Okay, this chart is courtesy of futurestradingcharts.com. So we've got a great big decline, weak rallies all the time, just weak feeble rallies. Another one coming in here. Could see another blip up there, but currently clearly a downtrend, which of course is not good for markets generally. As bonds go down, yields go up, and that, whatever the governments may say about keeping interest rates low, the reality is that as I say, King Canute couldn't do it, nor can the governments today do it. They can try, they can bluster, they can give the impression that's what they're doing, but it isn't really the case. Especially when it comes to borrowing money, you find that you can't actually get the rates that these people are hoping you might be able to anyway. The only thing they can do is they can keep the rates they pay you down, which they certainly are achieving extremely well, rather sadly. Right, so currencies. Okay, no change of opinion on pound dollar. We've got this great big decline here, which is this is the secondary peak here. Looks impulsive. This looks corrective. And it's stalling at the Fibonacci level. Look at a bit more detail. But this is all we've seen: a blip up, and then a pretty dithery move. It could be a 1, 2, 1, 2, but we won't know until we see a bit more downside. So. The bear case remains intact, but we need more to confirm that this actually is. We have seen another important peak here. Pound euro. Okay, as I said before, not looking at all good here with this great big decline down to the low around the beginning of 2009. Then A, B, C. That's A wave, B, and then a C wave rally, and now another great decline. We'll look at this in a bit more detail. There's a case. This actually is a 1, 2, 3. This is a 4, then a 5th wave decline coming in, takes us down to around 1, 1, 2 maybe. Alternatively, it's possible. The various counts there. It's possible that the decline is complete down to there. So there could be a kind of 4th there. So now an A, B, C. So either case, we're going to be not doing too much for a while. Either we're going to see another little blip down or it'll blip up, but the writing is on the wall that we're going to see pound euro fall another leg down, which is not good news. But that should be somewhere in the future. I think both pound and the euro have their own problems. So I think the pound dollar is more interesting right now. And that's all for today. In fact, thank you for listening to this. Hope you found it interesting and useful. We'll be back with the report on Tuesday morning as usual, and a special report if need be. Have a great weekend. Thanks again, and bye for now.